Good morning, everybody. Christopher from Serene Education with my analysis this morning for Wednesday, the 6th of February 2019. Hi, everybody. Okay, Forex Made Easy template applied to this particular chart. We're looking at this using the Forex Made Easy template, starting with a monthly time frame. Get a bit of understanding of where we are in this current overall picture. You can see that we've been channel bound for many a year, since 2017. We've come off the highs here of the channel high through the start of 2018, and we've been subsequently falling since. We've headed into a support level, which is in this case the 50 period moving average, but also over the bigger picture you'll see a lot of consolidation through 2015 and 2016 respectively. So there's a support and resistance factor here, not only with the 50 period moving average, but also previous consolidation points, high points through 2015 2016 alike. So here again, notice that we've seen a lot of hesitation of price action at this particular point. In fact, if you take the line even further down and you look at the lows, the current lows that we've seen through the latter part of 2018, in fact, we saw the August low punch through, then prices pulled back, then the reattempt in October. Nice bearish engulfing counter closing lower than the 50 period moving average for the first time in almost a full year. However, we didn't see any continued momentum on that because the November candle actually gave us an indecision candle. So therefore, December, January, February, March of this year, we were looking for that continuation. So breakout, pause, and then we're looking for the continuation. But in actual fact, price went the opposite direction. So we had this weak morning star formation, but price then reverted back to the upside of the 50 period moving average. So there's clearly a strong support mechanism here currently. So for us to get a better understanding of what we need to see is if we are to look at the bigger picture, we've come from a high point and we've been driving low. And that's clearly there. We've had a previous swing mechanism through the month of the latter part of September, October. We've come from a high before and we've driven down towards the low of the channel. If that's clearly the case, we need to then circumnavigate through the 50 period moving average in order to look down towards this lower part of here as a viable target for the foreseeable future. The first target we could get to before then would be the lows we saw through 2015 and 2016 respectively. That there is clearly there to be seen. We can see there was a channel along these points. So if we had a break of the 50, that would be our first TP level. Get below that, we would see some sort of hesitation and then a drive down towards this particular point, which is the long-term support level of this channel. So before we get to there, we need to really see something happening here on the hard right edge. And I'm just going to bring it up so we can see it all. Let's have a look and see how the indicators are painting the chart. So we have the 200 above price, which is not a good sign, but the 50 is below price. Now, excuse me, in any strong trend, we need to see those moving averages either supporting or resisting price collectively. In this case, you can clearly see that price is trading between them, which is a sign that we don't have a really strong trend in place. We have an intermediate trend because we've come from a high point, i.e. the resistance on the underside of the 200, and we're moving back. And that's what price tends to do with moving averages. If she's trading below one, she'll then move to the nearest one or the closest one below that. In this case, if we're not breaking through the 200, then she's going to then retrace or fall back towards the 50 period moving average, and then consolidate it, get below the 50, then we have clearly a trend. Okay, in this case it would be negative. We've seen the negativity unfolding on the intermediate side of things. If we get a long-term trend active here, we need to be trading below this particular point. So here again, we have to see if we can get some really weak euro data coming out of for this year 2019 to really paint that picture of continuation. Otherwise, we can see price consolidating here for some time. We've seen a lot of hesitation candles at this particular point. And as I say, no new lows or no more selling sentiment then starts to put more bias on the buyers. And that's the case, we need to see those things taking place as well. So we have a consolidation here. And if I drop down to we look at the RSI as well. So we know that the 200 is above price, 50 below, the RSI is below, and the MACD is showing signs of negativity, but slowdown in their weakness. So we have more negativity here. So if you look at all the arrows and crosses, there are more crosses than ticks. So there again, we need to be focusing more on a negative aspect if that's clearly the case. So if we drop down to the weekly, just zoom out so we can see a bit more, you can see clearly that we've had a lot of consolidation over a prolonged period of time. Okay, these are weeks. The 200 has done a fantastic job of supporting, where this would, on the higher time frame, would be the 50 period moving average in this case. If we look at the indicators, the 200 below price, 50 above. So there again, a sign that we don't have a true long-term trend in place. We clearly have a weak trend in place, but not a very strong bear trend for the foreseeable future, and that's what we need to see. And that would only happen if and when price closed below this current support and resistance level. Okay, the RSI is still below the midpoint, but you'll notice that as price has been going sideways, testing the same level over time, the RSI has got weaker, i.e. there's less bearish relative strength in the actual price action, which is a concern. And that's why we need to just be patient here. We need to see a more of a stronger statement of intent. MACD, fast sign above the slowdown, history comes above the midpoint. This is all signs of positiveness. So we have conflicting results here. So there again, please play caution. Okay, be cautious over here. It's far better to be patient. Look for a decisive candlestick of intent. Okay, are we intentionally buying? Are we all collectively buying? Are we all intentionally selling or collectively selling, to give us a stronger indication of what price wants to do? Okay, so we need to box this particular range, this messy range, and say, get out of it, give me a strong bear candle, give me a strong bull candle, then you have my attention. Until then, far rather just draw lines on the chart on the weekly and just wait patiently for that breakout to occur. Because if we did get the breakout to the downside, we would see a very strong, aggressive move to the downside, and vice versa. If we had a nice bullish engulfing candle close high, and in this case trading higher than the 50, then we're trading above both moving averages, which then dictate that we don't have this intermediate negative trend anymore. We would actually start to see more of a intermediate trend up, and we can clearly see there are viable target levels for the future, for 2019 in particular, if we did get that picture playing out. So here again, I would be more willing to draw a line, apply my trigger alert to it, and wait patiently for a stronger picture to unfold.